Good morning, everyone. Time for another silver update. Well, gold is falling back towards its fairly long-term trend line and one of the rising shorter-term trend lines. Most of you know the news. Coordinated series of margin hikes in both Hong Kong and the CME have resulted in a fairly dramatic collapse in the price of gold. Now, just to put this in perspective, the high that we reached of 1910 occurred roughly on the 22nd. We're back to a price that we first reached. This is a price we reached for the first time on the 8th of August. So we've given up approximately maybe 15 trading days in price or so, 10 to 15 trading days in price. So quite a dramatic sell-off. I don't think it's the end of the bull market. Over to silver. Silver has dropped back down from just touching 44 down to below 40. We have a nice reset of the MACD. Now the MACDs that I've been following, starting with the 8-hour, you can see we got a reversal and a crossover down. When we go to the daily, as I pointed out before, sometimes you can get a whipsaw effect when you break through and immediately break down. I think the weekly tells the tale more than anything else, because we did have a crossover, but right at that moment, that's when the smackdown came. That's actually fairly common. You can see the same thing occurring right here, where the MACD was about to cross. Obviously, the people who manipulate the price of these paper metals are watching these key technical points as well, and they know what the optimum time is to come in and do whatever manipulative shenanigans they're going to do. Now, obviously, it's a full-scale public relations war against gold. If you were watching the news, you saw that all of a sudden all of the gold bears that were silent came out. You saw headlines like, "Is gold really a safe haven? The gold bubble has popped." So these sorts of things, these are coordinated attacks by the powers that be, and the powers that be were obviously getting very desperate. A headline this morning that just came across the wire: Bank of Berkshire America. Buffett is to buy $5 billion in preferred stock in Bank of America. So if you remember yesterday, if we pull up the Bank of America chart, and you remember I've been following this one because I projected that Bank of America would be bankrupt within 1 month. Now, we had technically yesterday what is called an island reversal, where the price gaps down and then gaps up, and it leaves this island floating there on the other side of two gaps. This one may not be technically because the gap may have been filled there, but it's still very much like an island reversal. Now you can see on the Buffett news we've opened up above $8.50, so an enormous rally. I don't think you have to be a conspiracy theorist to see that pre-Jackson Hole meeting, the powers that be have moved into desperation move. Obviously, they've decided to save Bank of America. It's too big to fail, and they're not going to let it go down. Now, is an injection of $5 billion by Buffett going to make a difference? I don't know. It's very interesting that just the day before, Bank of America made the claim that they were in a good cash position, that they had 2 years and they could go 2 years without any injections of cash. And then we find this morning this headline, and the headline is right on the front page. So the Oracle of Omaha, who is recognized as the common ordinary type investor, of course that's all a fraud and a facade. He's one of the most connected insiders in the country. So obviously he knows exactly what's going on, and he's been given his marching orders from the powers that be. It's quite interesting, as one commentator pointed out here, that just a couple of days after, or I think it was 2 days ago, Warren Buffett met with Obama. And this commenter says, so B of A was on the edge of collapse, and Obama knew there was no appetite for any more bailouts. He summoned his lapdog Buffett to vacation headquarters to order him to prop up B of A. If you believe otherwise, you're an idiot. The real issue is there another round of collapse coming? This was just the first fire that had to be put out. And I agree with that commentator. I don't think that this is by any means the end of the story. I think that there's a lot more skeletons in the closet, and I don't think that a mere $5 billion injected into Bank of America by Warren Buffett is going to save it. So we'll see if I'm wrong on my prediction. I very well could be wrong that Bank of America would be bankrupt within a month, but I think that the response by the powers that be indicates that I was probably on the right track. We'll see if this is enough to save it. And I want to jump over to the silver I've been following over on APMEX. The bullion play that I've been recommending, if you remember, has been the America the Beautiful, and specifically the America the Beautiful Olympic Park coin, which is now at 209. I think they had 4,000. They've now got about 2,700 left, so they've sold about 1,300 of those since then. So that's a great bullion play. As far as the numismatic play that I was covering, I'm still recommending is the RCM Grizzly. My understanding is that the Cougar is soon to come out, but you can see you can pick up the Grizzlies now for $44.36. That's a fantastic price. They have about 7,500 of those left. The Wolf series has come down to about 58 bucks. That's still too high. There's only 167 of those, so they're dribbling out. I don't believe that the new Perth Mint Dragon series have come out yet. They're actually listed here on APMEX, and well, here they are. They weren't there before, so they are here and they're to arrive 9/23, and it looks like they're not going to have any of the 1 ounce in stock. The price of the 2 ounce is 100, so that's $50 an ounce. That's pretty good. Let's see how many they have. Well, it looks like they've ordered 4,000. I wonder why they don't have any of the 1 ounce. That's interesting. Now they do have the half ounce, and those are about 30 bucks, and they have about 4,000 of those. Like I said, they're going to be shipping September 23rd. I don't actually like this coin. I don't think I'm going to get any of these coins. Never mind the spiritual implications, but I really don't think that this coin is that beautiful. I may be wrong, so we'll have to wait and see. Keep an eye on the 1 ounce, because that's always going to be the key coin. I wonder if they pre-sold their lot, because they should have ordered these in bulk. Maybe it just posted and they were gone so fast that we didn't even get a chance to see it. I looked at them yesterday and they had them listed with without the picture, so apparently in one day these disappeared. So that's really interesting. I wanted to jump over to the latest Jim Willie. He's actually just put one out today, and it's called Panic and Anxiety Swirl a Storm. And I wanted to read just the precious metals section to you on this. And Jim Willie says, he actually wrote this after gold started to correct, so that's timely. Gold makes record highs. This week has been tumultuous. The best summary in my view is to conclude that the gold price set a record high and fully revealed what direction it will take this autumn. In the low-volume vacation-dominated days of summer, an opportunity to engineer a sell-off has begun in earnest. Gold has gone down to 1765. I think that now is 1728. So gold has gone down to 1765 and silver to $40 flat. Still way up on the year. Hats off to Ben Davies, who has been impressively accurate in his precious metals forecasts. He nailed the silver forecast in April, expecting a steep pullback to $35. We saw it. In June, when gold was trading in the low 1500 level, Davies boldly forecasted that gold would break above 2000 by year-end 2011. The strong upward moves seen so far in August have captured global attention. After action last week, Davies fine-tuned his 2011 gold call, stating he expects gold to reach $2,100 by the end of December, after first a correction to $1,675. Today we saw it. The hefty pullback will lose some faithful followers, but offer savvy investors a great chance to add to their positions. The cartel is busy making countless grateful Chinese, Indians, and Asians who have not stopped buying precious metals in defense of rapid inflation. They see the American bankers as the inflation villains. The sudden pullback has assured the last fire sale before the autumn gold bull romp, a great trampling event to come. It is written, it will happen. See the King World News interview. And he gives a fairly long-term chart of the breakout. The compromised clowns have been busy citing how the gold price is $150 to $200 too high based upon price inflation, or even 50% overvalued based on some cockeyed Fed business model. They overlook the broken, distorted market. That's the U.S. T-bond, supported by powerful usage of interest rate swaps, aided by U.S. Fed monetization still, and the migration from stocks to bonds. The volatile moves in the gold market can be interpreted with high predictability. The big down move today signals even bigger upward moves in the next few months. The money is moving quickly today on Wednesday. The 10-year U.S. Treasury has rallied on the TNX from 2.14% to 2.21%, a decent move. The crude oil price is up from 85 to 86, is a modest move. Nobody can deny that panic has hit the stock market, as the recession can be seen without rose-colored glasses. Expect much more debasement of the U.S. dollar as tax revenues fall and stimulus costs rise. The bigger U.S. government deficits must be financed during a truly hostile climate. The complete ruin of major global currencies is in progress, not stoppable. Money is being ruined to such an extent that people are bewildered, wondering what constitutes money if sovereign bonds are being attacked and losing value. The tainted U.S. Treasury bond market has become almost a source of great amusement. The entire major currency market is in turmoil. See the Swiss franc, the Japanese yen, and their rapid rise, several standard deviations above their norms or trend lines. Havoc has taken root. The Libyan chapter will be properly told in a year or two. Tyrant Gaddafi wanted to install a gold diner for North African usage, a similar sin committed by Saddam Hussein. These guys never learned that a challenge to the U.S. dollar is met with armed resistance. The U.S. and U.K. forces entered the fray. The secondary goal might have been to take oil producing capacity offline, thus lifting the crude oil price. Big oil interests do not want the global recession to rock the crude oil price too much. The other benefits have been the $50 billion in funds frozen solid in the U.S. and London banks. Another $50 billion is frozen in European banks. Expect it to remain out of reach of Libya's new leaders, despite talk. It is too badly needed within the Anglo banking system. See Oslo. The search is on, not only for Gaddafi, who is surely comfortable somewhere in a desert bunker, but also well-fed and well-medicated with his usual fare of psychotropic drugs. The hunt is also on for Libyan gold bullion. The Anglo bankers need it, since the COMEX and LBMA are just about bone dry, and the big US and UK banks are insolvent on the edge of failure. See their credit default swap rates on debt issuance. For the greater good of the Anglo Empire, gold must be found and secured and locked up in the banking system, regardless of the propaganda messages put forth. Prepare for $2,100 gold by January and $60 silver by January. The last open door is being made possible in the final days of August. Like last year, the months of September through January will be ones for the history books. The start of big bank failures in the United States. London and Europe should add to the gold run. Contagion has hit Italy, Spain, and France. The newest pigs look alike. The breakdown will be broad, deep, and frightening in the next coming months. The twisted thinking is probably that gold must be brought down as much as possible to make a lower base before the next gigantic upward moves beyond 2000 and probably past 2100. The gold breakout will capture global attention and make major headline news. This is 2008 all over again, but much worse. The storyline will be that nothing was fixed, but that nothing can be fixed, and much more debasement of money will come. The gold meter will rise in direct reflection. So, excellent article. I encourage you to read the whole thing. Gold is now trading at 1727. It has rallied just a little bit off the bottom. I don't think the bottom is over yet. Silver is actually rallying back up towards 40, so it's possible that the damage is done. We'll see what kind of a reset we have on the short-term MACD. Fairly decent reset back to the beginning of August, so we'll have to wait and see whether the damage is done or not. The price of Bank of America, of course, is going to be a real key indicator, and it looks like we are currently at up 16%, up $1.16 to $8.15. It seems to be backing off. The other big story today, of course, is Apple. Steve Jobs stepped down. It's now down only 1.5%. It was actually down, I believe it was down 10 or 15% overnight. It was down at least 20 points overnight. So it looks like that's coming back. So we'll just have to wait and see if Jim Willie is right, and I'm going to stick with my target of $100 gold or $100 silver by the end of this year, and we'll see how that pans out, and we'll talk to you next time.